Good afternoon, Philadelphia, and welcome to this edition of Race on Main Street. Thanks for being with us. We really appreciate it. I am your host, Scott Race, and we, in a short while, will be joined with Ciro Adams. He is a local CPA who does sort of like a specialty type accounting to really help businesses figure out their true value. So it's an interesting topic related to accounting and auditing and all those great pieces. But before we get started, I want to introduce my co-host and my business partner from Simon Capital Management, and certainly, as always, the most important part, my brother Stuart. Stuart, it's a great day in Philadelphia.
Scott, it's a little bit rainy today, but the day we're taping, but I think that's all part of the deal.
Yeah, it's fall, it's a little rainy, no big deal. Hopefully, I think it's this weekend's Halloween, so I think it's supposed to clear up by then, because it's actually, I think, supposed to get a little bit worse before it gets better. So,
yeah, that's what I've heard.
Yeah.
But hopefully, yeah, big day on Saturday for the Temple House.
Yeah, you're right. That's right. But according to my household, the only thing that matters is Halloween.
And mine too. Yeah, for the most part, you're right. You're absolutely right.
Anyway, so we have a great show. Ciro Adams. He's going to talk to us about sort of like specialty items.
The audit practice.
The audit practice.
Yeah.
It's not really accounting, but it's something certainly.
Well, Ciro may disagree with that, but.
Well, I mean, it's more specialized.
Correct.
It's not like your everyday, let me do your tax return kind of
Correct.
stuff. It's very specialized.
That's absolutely true. Absolutely true. But before we get to Ciro, let's talk about what Main Street is concerned about. And Main Street today is concerned about the student loan bubble.
Huh.
I had lunch yesterday with a woman who deals in credit aspects. And one of her, she was banging the drum about how, it's coming around, there's going to be another bubble, the student loan thing. So I got to thinking. So I went and I looked up how much money are we actually talking about. So at this point, owed on student loans, the aggregate number.
Everybody across the country.
If you added it all up,
right.
Everybody that's got a student loan balance and is paying on it is, get ready, $1.3 trillion. Trillion with a T.
It's a huge number.
It's a huge number, but let's put it in a little bit of context. All right. Now, we just had the idea of a bubble.
Right.
Became a buzzword back in 2007, 2008, as a function of the Great Recession and the housing bubble. Okay. Now, when that bubble burst, we suffered losses. The economy suffered losses. The loans that went bad.
Right.
Went bad. You want to take a shot?
At the amount?
At the amount, yeah.
Well, I had read that it was actually, I thought that the housing and the student loans were very close in comparison. I thought I might be wrong, but I thought I had read that.
Not so much.
No.
The housing bubble was about 10 times the size of the student loan circumstance. So
I didn't know that at all.
Loans that went bad, loans that went unpaid because of the housing bubble, $10.5 trillion.
Whoa, I didn't realize it was that big at all.
Now, I'm certainly not going to say that 2008 wasn't quite a trial for all of us, and certainly those of us on Main Street.
Sure.
But we've come through for the most part. Now, I know that I can't speak for everybody, and I don't mean to speak for everybody.
Right.
There are people out there that are still suffering, and there's always going to be people that are suffering.
Yeah, I mean, you're right. There's some big bumps, but I think I know where you're going with this in terms of this new bubble potentially bursting and the comparison between the two.
I want to spin it in a way that makes Main Street feel a little bit better about it.
Right, I
agree.
agree.
It's not going to be as bad. That it's 1/10 the size.
Right. If it even happens.
If it even, absolutely.
Because now we have steps and procedures in place as a result of what took place to help us better prepare for issues that relate to not being able to pay back debt.
That is absolutely correct. But let's talk about not paying back debt for a minute.
Sure.
Okay. We got all these people out there who are saying, I can't afford my lifestyle because my student loans are killing me. Right. Let's just suppose for a minute that we overnight snapped our fingers and forgave $1.3 trillion in student loan debt. Now, I know that there are people out there right now who are probably like saying, what? that sounds great.
Having some student loans left over, I am all for that program.
Let me tell you, put your way through medical school. At any rate, okay, on $1.3 trillion in debt, and I used some averages here
Right,
because
I
you have
gotcha.
to average, but on $1.3 trillion in debt, you have any idea of what the debt service on that is? What's the interest payment every month on $1.3 trillion?
Oh my goodness, this is
It's not unfair because I'm not telling you what the percentages are and what the
everybody's
terms and things like that.
percentage is different.
Right. So I had to take an average,
Right.
and I had to take an average on the terms
Right,
also because
gotcha.
some student loans go out like 20 years and others are 10.
Right.
All right. But it's approximately, give or take, 100 million. It's approximately $11 billion
Every month.
per month that is paid in interest on student loans. Now, just imagine for a minute. Let's have, if we had those squiggly lines,
Right.
where we could imagine, okay?
Right.
$11 billion not being paid for interest on student loans, but being paid into the economy, okay?
Like
buying pizza, buying movie tickets, buying a new refrigerator, getting that new car.
I'm thinking more like building a new manufacturing line.
Even better.
Yeah.
Okay. But I'm just saying that just for a minute, let's just imagine, and I'm not obviously advocating, although there are people out there that are way smarter than me who are saying that this would not be the most terrible thing in the world if we just ripped off the Band-Aid.
Right.
$11 billion a month being spent.
So what you're proposing is that we forgive all the loans.
I'm proposing that. I am.
Okay,
I'm going to
all
go
right.
out on a limb
And
here
then-
on
and
my
then-
platform.
And then we're going to assume that money, and it's probably a very good likelihood that it will filter into the economy
We're
somewhere.
America. You think it's going to be saved?
It's going to be spent
Right.
somewhere. So, but you have to look at the other side of it. That $11 billion that gets paid every month, who does that employ? And how are they now all of a sudden impacted? There's both sides to it. So it's probably not as simple as just tearing the Band-Aid off.
Well,
because
of course it's not that
right,
simple, but I'm telling you that there are people out there, economists,
Right.
who are saying this would be in the long run good for the economy if we did that.
You know what? I'm sure that it probably would. I mean, it's really a question of the $11 billion. How to what's better? Is the $11 billion being paid back on these loans impacting the economy at what level? And if we took that money and dumped it into the economy, just spending it, how would that impact the economy?
Rising tide lifts all boats.
Yeah.
And I can imagine that we're going to get a couple of letters from university presidents saying that's the worst idea I've ever heard. But
what?
Look, there aren't any more buggy whip makers.
No,
I mean, it happens.
You're right.
So.
So it's something. Yeah, I guess some smart folks out there have certainly calculated the numbers. I'd be willing to bet that brilliant economists, could make an argument either way.
Yeah, I'm sure. Well, it's the gray science. But
Yeah,
again, why we started this all is, hey, Main Street, don't relax.
Right.
Okay?
I
It's
agree.
not going to be anything like 2008 if the student loan bubble bursts.
It certainly doesn't seem it. When you look at the numbers, you're right. The one thing that I think about the student loan, and we could sort of maybe finish with this and move on from here, is that what makes me a little bit crazy about the student loans, and I wish this could be addressed, is I wish there could be a fixed rate for everybody. Okay, because depending on when you got in or when you got out or when you could refinance the loans, there are some folks that have tremendously low interest rates, and there are others that have significantly higher interest rates that really, really put a kink into maybe the money that they get to spend or save, wherever they want to place their dollars each month, because their interest rate is so much different. I mean, imagine somebody with, and I know folks that have these, and you probably do as well, a 9% interest rate on their student loans.
Borrowed money for college back in the 1980s.
But their neighbor has one for 3 3/4, something like that, but you can't refinance it again.
Only once. Yeah,
Only
you can
once. So
but
if there was a way to make it a little bit more, I'm going to say fair, I'm going to use the word fair across the board, so that those folks that are getting really hit hard with those higher interest rates might be able to take on the ability to reduce that somehow.
Well, there's definitely a lot of issues here, but again, if this bubble bursts, it's not something you need to stay up late at night and worrying about how it's going to affect the economy. It's going to be much less of an effect than we've seen in the past.
Yeah, it would have to be if you're
bubbles.
talking about such significantly lower numbers. I thought the numbers were much closer together.
No, apparently
So to
not.
hear that there's that great difference is actually good news to hear.
Yeah, good news.
Awesome.
So we're going to move on to our guest, Ciro Adams, this week. Ciro is an audit accountant who was educated at Rutgers University, so go Scarlet Knights. Ciro is a veteran of the United States Marine Corps, and is licensed pretty much all through the Mid-Atlantic region, Pennsylvania, New Jersey, Delaware, Virginia, Maryland, and New York. He's a member of the American Institute of Certified Public Accountants, as well as several state-level institutes or societies of that nature. He's part of the Maryland Association of Corporate Growth and the Philadelphia chapter of the Turnaround Management Association. So please join me in welcoming Ciro Adams to the show today. How are you doing, Ciro?
Good, good. Gentlemen, thank you for having me out today.
Yeah, we appreciate you being here. So let's just jump right into it. Your practice, tell us a little bit about your background, how you got to where you are today, why this path in the accounting world. Did it find you or did you find it? You know, give us the, the few minutes about who you are, how you got to where you are from this professional standpoint.
Sure. I went, as Stuart said, I went to school at Rutgers, and I'm actually fortunate enough that I actually am practicing in what I learned at college. So, a unique situation there concerning some of the career choices today. I started work at a very large firm, Deloitte. In fact, it was DH&S when I started, and Deloitte & Touche when I finished. And at the larger firms at that time, especially at Deloitte, they were very old traditional. They did audit and tax consulting. So when I left Deloitte to open up my own practice, naturally I just did the audit work that I had always done at a larger firm. And it ends up where that our firm became a very boutique firm or a niche firm, in the sense that many CPAs are out there and they do accounting, they do taxes, they do valuation, they do everything but audit commercial entities, because they think that that's a very high risk type of work to take on. So they sort of avoid the P part of the CPA, where our firm, in fact, since I lead it, that's the only thing we've ever done. So to us, doing something else would probably be more risk for our group than it would for other firms doing that.
Fair enough.
Yes, we are a niche firm. Our business is really a transactional business, or what Stuart probably calls merger and acquisition, in the sense that whenever people need to raise money, they need audited financials, whether it be through a bank loan, whether it be through a private raise, whatever the situation may be. We're also
So, Ciro, if I could so if I'm a small business owner, and you mentioned that you're a boutique firm.
Yes.
Can you give us a concept of small business? Like that's kind of a moving target.
Yeah, small business is a moving target. Our practice is really based on need. As the economy picks up, there's more business activity, thus our firm does a lot better because our clients are doing better because of that. Okay. I think the best way to sort of explain it is, since we're from Wilmington, Delaware, in Wilmington the banks sort of have a little criteria where that they'll lend up to $2 million on their tax returns of the business. Between $2 and $5 million, they'll ask for a review of financial statements, and above $5 million, they'll want audited financial statements.
That's the amount of the loan that this business is asking for.
Yeah, that's the amount of loan value.
Okay.
And so our firm normally would only work with clients that either need a review or an audit. So you can think of the size of a company that would take on $2 million or greater in debt.
Sure.
That also sort of is reflective of our practice, where we don't have many clients in the state of Delaware, even though we're from Wilmington, because there aren't that many businesses that can take on that size of debt. So we end up going Florida, California, New York. We have clients nationwide in order because of that reason. So we sort of go where the business is in that particular sense.
Yeah, okay. I guess that's often the case. Sometimes you
Yeah.
set up shop here, but you got to go to, if the water's over there, you got to head over there if you want a nice cold drink.
Yes.
So you mentioned the idea of mergers and acquisitions as a big part of the process here. So how in terms of that phase of a business cycle, Where do you fit in with that? Again, the valuation side, how does it work?
Actually, no. As an audit practice, we don't do the valuation. The valuations are done by firms that specialize in valuations, or even some CPA firms do that. Okay, where basically what people want, or bankers or the people who put up the money, want reliable financial information. And so we audit or do reviews or due diligence to give them some reliability in that financial statements.
It's interesting, you mentioned liability about that, how many accounting firms, CPA firms would shy away from that. As you're talking more and more about it, I could see why somebody might shy away from that, based on you sort of signing off on the fact that this business is worth what it is. For a bank to then come in and lend on that seems like a pretty, that's significant. That's the statement that you're making for them. You got to be willing to, have some confidence in what you do. So,
we have a good practice. We make sure people are well trained. We use the latest and greatest software and technology out there, and we try to be on the cutting edge as far as understanding regulations and things of that nature. And yes, we are a regulated industry. We're overseen by the PCAOB, and they're coming in to inspect us in November. So week of November 16th should be very much fun for us. But
I know that feeling.
You're exactly right. To us, signing those after we complete our job is just part of the job. It's something we've always done.
Sure.
So we happen to enjoy that. Maybe we're unique in that particular sense.
That's what brings the
versus
Well, if you
something
enjoy what
else,
you do
yes.
for a living, then you never work.
And
Exactly.
that's what makes it that boutique type practice.
There you
I
go.
mean, I would imagine that there are lots of accountants that would be afraid to do something like this, but you guys are standing up saying, no, bring it on, we can do it, we're great at it.
Yeah, and we fill that low middle market where perhaps a large firm, whether it be my alumni at Deloitte, or a middle tier firm, whether it be a grant or a BDO, just might be too large and can't reach down far enough for them, where we could bring the same services and be much more customer oriented in that particular sense, because for us it would be a big client and be able to service them accordingly. So we're the smaller version of those large firms.
There you go. And you're filling a niche. You're filling a need.
Yes.
So if I'm a small business, and it behooves me to have audit ready materials, or I'm not sure the exact lingo, but
Yeah.
to be in a constant state so that I can go for financing whenever I need it.
That is one of the toughest sells for our firm. In this sense, everyone looks at an audit as something that they have to do, not that they want to do it. And they're going to wait till the last minute or two to do that. And so if you were going to do a small private raise, let's say, through a limited partnership or private planning memorandum, which your firm is very familiar with, okay, depending on the size of money they're trying to raise, does require a year or 2 years worth of audits. And so for us to have to go in there and do 2 years of information all of a sudden, it extends the timeline from when they can put the deal together, and it makes it a very lengthy process for them.
And I can tell you from personal experience, when entrepreneurs
Yeah.
try to raise money, they need it yesterday.
Yeah, they need it yesterday.
So they have to
exactly.
be. So a good rule of thumb is this is something that should be done on a relatively regular basis.
It should be done on a regular basis. Again, it's sort of a has needed, but most companies do need working capital. Most companies do need
Sure.
to raise money. A business owner may not want to be audited, but quite frankly, if you go to sell your business and want to get out at 55, hey, I'm done doing this, I'm going to take some money and go. Quite frankly, you'd be more attractive if you had audited financial statements for 2 or 3 years. So if 55 is your goal, and you guys are the best at planning for retirement, or what you want to do with your second round of life, having that preparation so that you can move forward with that and get a much more attractive sales price.
Yeah, I never thought of an audit as something you would do on potentially a regular basis. I think
Yes.
the way I guess a lot of other folks do, which is probably not the right way to think about it, that, wait a second, I'm faced with some circumstance, let me do an audit now, as opposed to...
But it takes time.
Yeah, but it takes time, right? And also the idea of having done them from, almost like on a regular basis, you're right, it's gonna probably prove to be very valuable, because you're right, most businesses throughout their business time horizon, they're going to need money, they're going to need to borrow, they're going to need these things in place at some point.
Yeah.
And if you need 2 or 3 years of them to be looking at this audit process as part of your regular routine, or somewhat more closely to that, then all of a sudden I'm faced with this issue, might not be such a bad idea.
Yeah, exactly, and that's why it becomes the toughest sell, because people plan that far in advance. To them, it's what am I doing next week or next month versus what am I doing 2 years from now strategically. And in that particular case, if you think about it, if I'm an investor and somebody wants me to invest $2-3 million into their deal, am I going to go with the guy who has audited financial statements that I can rely upon, or am I going to go with, his tax returns where he was probably overly aggressive? And there's no opinion there to say that there is any liability. So I'm a reliability. So in that particular case, it would make a difference.
So just also, I'd like you to comment, if you could, in the context of the show, the Main Street circumstance of the show. This is not just something that big publicly traded Wall Street firms need to be involved in. It's something that Main Street style businesses need to be aware of and take part in.
Absolutely. In the sense that a lot of these banks, whether it be some of the larger ones, PNC, Wells Fargo, BOA, they all have large practices of lending money, or what we call alternative financing, non-bank financing, things of that nature. So if you can't do a commercial loan, or if you need to raise money elsewhere,
and that's a huge thing on Main Street.
Exactly, and remember, it's a transactional business, and everybody wants to be part of a transaction. That's why it's called merger and acquisition. Whether I'm selling something or whether I'm buying something. If I have a huge inventory and I can't turn it over fast enough, I need to borrow to carry that inventory. And again, that's a working capital need for that. Accounts receivable. Maybe I'm in a growth mode and I just can't collect fast enough to increase my business size as fast as I want. So they're going to have to go out for lines of credit or other things in which they would need that, and whether they need an audit or review, or due diligence is probably the most watered down of the three in that sense. But you have a third party going out there and kick the tires of the business so that you can, again, have some reliability in numbers that are there.
So
It's a Main Street thing?
Yeah, it is a Main Street thing, and I think from a business perspective, it's got to be the thought process. And we work with and know a lot of businesses, as you do as well, Ciro. That I think that the idea of an audit makes people nervous because they think it's an IRS kind of thing. So they hear that word and it already puts a negative spin on it. When really, to handle something like this on a more regular basis might be actually a very good practice for a business owner who's probably at some certain threshold of revenue or looking to expand. I mean, it's not something that I think most of them would consider as a regular action item, but it should be. It sounds it.
Yes, exactly. And you're correct to say that if someone says IRS audit, but in essence, that's what we call a compliance audit. Have they complied with the rules and regulations of the tax code? versus a financial statement audit where they're presenting the financial condition and operations of the company. And so it's a completely different thing. And we do work with clients. The biggest thing is presentation. And our opinion is that they give a fair presentation. And at times that could be different ways of doing things.
Yeah, it sounds
And
like a...
so it's a presentation to their company for somebody, whether they want to buy it, sell something, or lend them money.
Yeah, so as we start to look to, because we could go on about this for hours, it's actually, there's more depth to it than I probably even realized coming into it. But if folks want to get some information about this, about Ciro Adams, all you have to do is go on the web. You can go to ciroadamscpa.com.
Ciro with a C.
It's ciroadamscpa.com. There'll be tons of information for you. It may not have been something you thought about as a regular practice, but hey, maybe it's something that you should consider. So
Sounds like it's pretty important.
Yeah, I am.
Well, we always talk about small business being the PT boat versus the ocean liner.
Yes.
And if you're going to turn on a dime, you have to be ready to turn on a dime. It's not something that just happens.
Right, and I think one of the things that you had mentioned, Stu, is, and this is critical, is that when those businesses, you know, IBM has dollars, they have deep pockets, they have shareholders, they have resources, they have, you know, they're in most often in good shape to tap funds in most areas, or a company of that size. Small business owner, an opportunity comes up like that PT boat, they need that money yesterday, as you put it. So now all of a sudden I got to come in and have an audit done for maybe a couple of years.
It's going to extend the project.
It's going to extend the process, you know, maybe far enough out where that opportunity is now no longer an opportunity.
Correct.
It's a missed
you gotta
opportunity.
Be ready. You got to be able to turn that PT boat. Well, we will you know, keep abreast of this, and certainly thanks to Ciro Adams for joining us today. Just to go out with some fun stuff, as we usually do. Real quick, is it better to take your Social Security benefits at the age of 60 when you first can, or at the age of 70 or in the middle at 66?
All right, so I have an opinion about this.
What's your opinion?
My opinion is this, is that based on the average life expectancy of a person, I would take it, and I know this doesn't work for everybody, I would take it as early as I could. I would take it at 62 as soon as I could. Wait.
No, I'm not going to disagree.
All right, no, I'm not asking you to disagree or not disagree, but there are some instances, and people need to be aware of it. If you take your Social Security early and you continue to work, if you make over certain amounts of money, you have to give portions of your Social Security back until you hit your, what they would call your NRA, your normal retirement age, your complete retirement age. So you must be careful with that. So while I say take it at 62, that's with the idea that somebody is not going to work again, or they're going to work under those limits, and you have to make sure that you don't fall, you know, sort of victim to that surprise of, wait a second, where's my Social Security? And they hold the payment for 8 months because you're essentially paying them back for earning too much in a year where you were earning Social Security at an early age. So
and to wrap it up, the best answer is consult your investment advisor, because you're right. The answer is there is no correct answer. Right. The variables are so numerous that it's impossible to say in any real sense what's right and what's wrong.
Right.
You got to consult your professional.
Yeah, I agree. So, well, thanks everybody. We appreciate you joining us today. We'll see you out on Main Street. Have a great week. Steve.